Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. I'm here so you guys can kill it in the markets. And you can kill it with me by joining me on this channel and riding the commodity boom higher. I've got some information behind me. I've done some updating on some crazy charts, and how accurate they are predicting the future. We're going to go over that. I've got my old charts that I did a while back, and then I've got new charts that are updated. And you can see that they are scribing out the same pattern as Bitcoin and some of these other ones, which is more or less just herd mentality amongst humans. And herd mentality, what happens is it creates patterns. And those patterns are created over and over and over. So what I did is I took something that is in the crypto market, and I'm comparing it to things that don't move as fast. I'm going to call it, it's like cheating. Because if you can see the herd mentality in the cryptos, you'll see it delayed in our commodity sectors. And you can make insane amounts of money with very low risk in the commodity sector. And I can tell you why that is. And that's why I've got this presentation behind me, is I'm telling you why it's such a low risk, great reward on every single aspect in terms of valuations, in terms of market conditions, and in terms of technical analysis and chart pattern. And I'm going to go through this, and I think that the patterns are actually quite profound. They increase my stranglehold over the shares that I own in my stocks. I will not sell my shares until these patterns complete. It is uncanny how well these patterns are scribing out. And so stay till the end. You got to see these patterns. I'm going to walk through the market conditions and valuations first, and then I'm going to go through these patterns. The patterns involve oil companies and uranium companies. They're in the energy sector. They also have some gold companies in it as well. So I'm going to dive in here. I'm going to give you my opinion on this entire setup in the commodity market. So here we go. I'm going to first start with new privately owned housing unit starts. And I know that sounds incredibly weird to start with real estate, but in my opinion, real estate actually sets the pricing of all assets in the world, especially the United States. And ultimately, what really drives the real estate market is demographics in the United States. Since we're the reserve currency, we are the most important because the inflation and deflation that happens from the demographics in the United States impacts the pricing of all commodities because they're priced in dollars. But here's the new privately owned housing unit starts. We've got the average going through here in this dark line going across. I've got some different colors above and below the line. And some of the colors are the same, showing that we've got a deficit and that they were built in a very big, we'll call it an expansion phase of real estate. Anything that's above the average and the housing starts go above it is an expansion phase of real estate. The larger the expansion phase, the more inflationary it is. So we had a massive inflationary expansionary phase in real estate in the early 70s. It dipped, and then we did it in the late 70s. So in the 70s, we should see the M2 money supply, if my thesis is correct, go up in the early 70s and late 70s. The early 70s is this big dip here, or the big move up here, and then another move up here in the late 70s. These two increases in money supplies are nothing more than the housing starts here. And the housing starts, this is new homes being built, has new loans against new homes. And those new loans are inflationary. They increase the M2 money supply as seen from 1970 and the late 70s. And eventually, with a lag, so the black line's the M2 money supply. The red line is inflation. And if you notice, inflation is just lagged. So if this is the M2, it's lagged to the right-hand side a little bit. So the M2, if you want to see what inflation is going to do, you stare at the M2. You can take your positions in here as it increases, and then wait for the inflation to come. And you can kind of see what this does. So we've got, I'm just going to finish this slide off here first. Whenever you have low valuations at the beginning of an expansion phase for commodities, that's when you have the alignment that you want to be in commodities. And we had an alignment in 1970, which is the beginning of this expansionary phase. We had an alignment in 1998 at the beginning of this expansionary phase. And we have an alignment at 2020. And I'm going to show you on another chart what that commodity to stock ratio looks like. But there's a correlation between an expansionary phase and the M2 money supply. The M2 money supply did get a little bit jacked up because they've been printing money and throwing it into the M2 money supply, trying to break this cycle. This is the cycle they're trying to fight. Notice that every time we go down and below the average, we go into these dark areas. These dark areas are recessions. And every time the housing real estates contract, we go into a deflation or deleveraging. So an expansionary phase is a leveraging up. A going down is a deleveraging when you get below the average. That's where you get all these recessions. Notice that every single deleveraging in the housing starts results in a deflation or recession. So recession, down recession, down recession, down recession, down recession. We went down recession. We had one recession. That was the dot-com bubble. Down recession. And notice that every time we go into an expansionary phase, there is no recessions. So we're going into an expansionary phase. I do not predict a recession, but we could have a dot-com bubble. So no blowout recession is what my guess is. But we could have, if interest rates go up high enough, stocks eat it. So we've got the M2 money supply. Notice on the right-hand side what the M2 money supply has done. It has gone vertical. We've gone over 20%. And that's when you see clips like John Paulson come out and say we're probably going to see good rate of inflation. And it's probably not going to be transitory. And I agree with that. And we're seeing the red line start to come up, and we're going to meet this, remember, with a delay or lag. This move here is just this move in the M2 money supply. We haven't seen this big move yet. And you're going to see this big wave of inflation come at us. We've got the commodity index to S&P 500 ratio. This is the ratio that I was referring to about it being cheap and getting the alignment in relationship to residential real estate starts. Whenever it's around this area, the green circle here and the green circle here, commodities are cheap. The red circles, commodities are expensive. We want to buy when they are cheap. And if you notice, we've never been this cheap in the commodity to stock ratio, which means stocks have never been so expensive, commodities never been so cheap. And what I'm looking at is I'm looking for a break to the upside so that we start moving higher. So if I zoom in on the right-hand side where we have full alignment, we've got a green buy signal in 2020, and we have an expansionary phase of real estate, and we have an big ol' inflation push from the M2 money supply. Everything's in full alignment. We're seeing commodities. This is zoomed in, real-time, updated October 12th, 2021. We're seeing this start to bottom. We've got the blue line crossing the red line, which is the 50-day crossing the 200-day. It's called the golden cross. We've got a big chart pattern that's developed. We've broken to the upside of the chart pattern, and we're continuing to move higher. I don't expect this to go straight higher, but I expect it to cycle higher as it goes up. So we have the CRB index outperforming the S&P 500, which means that commodities are outperforming stocks right in front of your face. And what I'm proposing here is that this is the largest opportunity that you'll probably see in your life for a low risk, asymmetric bet, which means very huge upside with very limited downside because we're buying it so cheap at the bottom here. That this is one of the best life-changing investments of our life. We look at, I'm gonna kind of zoom in some sectors here. This is a pound of uranium in gold grams. And we price it in gold because gold is the inflation index. And if you notice on the right-hand side here, that we are starting to turn up. And if I were to throw a little trend line in here, you've noticed that we have broken the trend line. So we are starting to break trends, and we're doing it with the ratios. And the ratios are important because you're pricing an asset against an asset. You want to know what is going to outperform. Uranium just broke its downtrend. And this is as of September 2021. We could see a big move higher in uranium. And I am positioned for that large move in uranium. We've got the gold to oil ratio. I'm going to throw in a trend line here. We are breaking to the downside, which means that oil is outperforming gold. There it is, and you can see the breakout. Now, we could backtest here. We could come back and backtest. This ratio could come back and then move on up. Or it could come back and it can be quite volatile, the ratio. But we are dipping down below it, and we could compress this ratio against gold all the way to about 5, just like we did in 2008 at the end of that commodity bull market, which was also in an expansionary phase of real estate. This, I think, will compress all the way down, and we're going to see a massive outperformance of oil in relationship to gold. I've got the gold to monetary base ratio, and this is something that's different from the 2000s. It's more like the 1970s, in my opinion. And what I have here is the gold to monetary base. And what this is measuring is what has gold accounted for the monetary base that's been created. And the lower this ratio gets, it means that it's more out of whack in relationship. So gold has not accounted for the money supply that's been created, is what this chart is saying when it's on the low side. What I think is going to happen is we're going to break out of this descending triangle pattern to the upside and compress all the way back up, potentially to a 3.5 to 5 ratio, just like the 1970s did in this compression of the ratio, where gold accounted for the monetary base. The reason I think this is going to happen is a couple-fold. The conditions are the same as the 1970s, and the conditions means that we could see a rising interest rate environment. Gold loves a rising interest rate environment with high inflation. You have to have high inflation for a high interest rate environment, and it doesn't come often, and it's tied to demographics, in my opinion. So the demographics where the baby boomers were buying homes in an expansionary phase of real estate drove this ratio higher because interest rates went higher. This is what the interest rates look like. This is the 10-year interest rate on Treasury bonds. From 1970 onward, we moved on quite dramatically. Now, I don't know if interest rates are going to do this. I don't know what they're going to do in terms of percents. I just think that they're going to go higher. We've been in this Generation X, smaller demographic as the interest rates have fallen, and we're about to break to the upside on interest rates very soon. And what happens here is when interest rates go up, it rotates money. And that money is going to rotate from bonds and perhaps even stocks into this guy called gold. And the reason that it's going to move is because bonds go into a real negative interest rate, which means you're losing money in bonds because your payment is being eroded by inflation faster than the interest that it's paying you. So if your inflation rate is greater than your interest rate, you get a real negative rate. That's what it's called. So we had real negative rates in the 1970s and 80s. And what happened was people ran out of bonds and they ran into gold, which then accounted for the money supply. And we could have went back on a gold standard in 1980. All that money rushed back into gold. What I am showing you in this picture is that if you were to even look at the herd mentality pullback here, and maybe I'll do that here. I think I've got one up. Nope, this is something else. If you look at the herd mentality on pullbacks, this pullback is almost done and it's about to move on higher at some point here very soon. And if we see those market conditions, I think that gold is going to account for the monetary base much more so than it did from 2000 to 2008, which is this little blip here. We are now fully all the way down in this pullback where the herd mentality is ready to shift and buy gold. I can't tell you the exact timing, but I think it's very soon. And this could compress all the way back up, which means gold could easily go parabolic and potentially go between ludicrous numbers. Perhaps I'd say maybe around $25,000 an ounce if it were to get back up into this area at today's monetary base. It's probably going to be higher because they're going to be continuing to create money. And it hinges on the interest rates going up and the larger demographic of the millennials moving into home buying years. And it's very rare to have an opportunity to buy precious metals at such a low risk opportunity and such high rewards. And it's very rare in time that you can have that. And gold has no counterparty risk. And it's lower risk of default. It's the lowest risk of default in what's called the Exter's pyramid. You've got derivatives and unfunded government liabilities, non-monetary commodities. That's where we're also going to be playing. We've got real estate that we're going to be playing. This is risk. Corporate muni bonds, government bonds, treasury bills, and paper money, and then gold and silver and other precious, well, those two precious metals is at the bottom of this upside down pyramid. So this is the risk. Very low risk, very high reward. Now looking at the market conditions that I'm describing, the last commodity bull market was from 98 all the way to 2008. And what we saw was the Baltic Dry Index rocketing higher during that time frame. And what do we see here? I've got two charts here. We've got the Baltic Dry Index rocketing higher above its resistance line. It's rocketing higher. We've also got it rocketing higher and just showing a different downtrend break that we've got on the Baltic Dry Index. And I did this in August. I should probably check it even more recently. What this is saying is that we're getting confirmation from the Baltic Dry Index that a commodity boom is coming. We're seeing that the United States inflation rate is breaking out to the upside from a long, drawn-out, low inflationary period, which is more indication and more data backing the thesis of the expansionary phase and demographic shift. We're seeing the XAU to gold ratio. Remember, we have gold. I'm going to go back here. We have gold at a super low ratio, which means gold could rocket higher, very much so, against the monetary base. But we also have the gold mining silver index, absolutely dirt cheap in relationship to gold itself. So you have a double ratio move here. You've got gold accounting for the monetary base, and then you've got the gold silver index accounting against gold, which is going to outperform. The XAU is going to outperform gold, which means that the gold mining companies are going to outperform gold, which means you're going to get a huge, huge leveraged move in the gold and silver mining index in relationship to gold itself. We've got platinum price. Tell me that doesn't look beautiful if you guys like looking at charts. Consolidation phase, breakout, gone. Consolidation phase, breakout. You can actually draw this way too. That is a breakout there. Gone. Notice that the patterns are exactly the same. Herd mentality working to the T. We even have this little up and pullback. There's our up and pullback to the trend line. Here we are at the trend line. What do you think I did? I bought it. I bought physical platinum. I'm buying the heck out of physical platinum. Tell me that chart doesn't look good. Tell me that you can't see the patterns. They're clear as day to me. Now, what I did, and I'm going to back out and let's talk a little bit about something here. These patterns and herd mentality repeat over time. So what I'm doing is I'm taking a cryptocurrency Ethereum. I'm looking at that pattern and then correlating it to other assets. This pattern repeats. And Ethereum and Bitcoin and these other ones, the pattern happened quicker in them. And I'm just using that pattern and comparing it to some of the other assets that I'm invested in that I've looked at. And these are just some examples. They're not all examples. So let's dive in here. And I'm going to show you some pretty crazy stuff. So when I first did the analysis, this was REMX. REMX is the Van Eck Vectors Rare Earth Strategic Metals ETF. if you notice, this small pullback here before the launch in Ethereum had some traits. This overall herd mentality move is the same as the star is star, the arrow is the arrow, and then we had this accumulation phase in the bottom here. This is the accumulation phase on the bottom. We break the line to the upside where this arrow's at, and then we pull back. So we broke to the upside, and I did this August 9th at 8 p.m., and I showed everyone on the channel this, and I said we're probably going to break out and then pull back a little bit. Now let's see what this actually did. It pulled out and came back. This is a perfect move, and you can see those two moves, right? So this is now pulling on back, and right now I think the rare earth metals are a good spot to be buying because we are about to go a little bit sideways, probably, and then a huge launch will be coming, I think. This is what's in front of us. And it correlates with the market conditions. It correlates with the valuations. It correlates with supply-demand fundamentals. It correlates with all these trillions of dollars of packages for electric vehicles and renewables. And that uses the rare earth strategic metals ETF. This is uncanny how well this has predicted the move from August 9th to October 12th and this little pullback. And we're right here where my arrow is. We're right at an opportune time before this launches, in my opinion. I'm going to continue doing analysis like this. This is Ethereum and SM Energy. SM Energy is my workhorse. This is my cheetah. This is a cheetah on steroids. The reason I went into this is because it's ultra volatile, and this chart pattern here is beautiful. It's picture perfect of a perfect chart, in my opinion. This is what I did on August 9th. I've got the star and the arrow. The star and the arrow is how this correlates. There's an accumulation phase. This accumulation phase is super volatile and moved all over the place. It's potentially, and I'm going to show you this can potentially, this move here could be right here before we launch. Because if you look at kind of where this all sets up, the bottom here, I think the bottom aligns with this guy right here, and maybe I'll draw it in. Well, actually, I drew it in on this one here. So it's this top line, and I was trying to really play around with some stuff where we pulled up, pulled back, and then we launch higher. We pulled up, pulled back, and now we're launching higher. And we've got a long way to potentially move on up if we get a similar pattern like this. I don't know if the pattern will be exactly the same, guys. I don't have that crystal ball. But what I can tell you is these patterns are so similar and uncanny that I think that they are probably going to be very closely related. I just don't know how big they will be. I am going to imagine that they're going to be gigantic because oil has been underinvested. We are at low valuations in terms of ratios, and all of the market conditions are set in place for this to happen. So I don't see how it would not happen. But again, always hedge yourself. Don't go all in on anything. But I'm riding this thing. I think that this arrow here is right where we're at right here. So we pulled on up, we pulled on back, which this area is right there. That's the area right here. And this thing is on ultra steroids. It is highly volatile. And I think we're about to launch to the upside. We've got some patterns that we broke. I can draw that in there if you'd like. I've got the blue. We're doing blue. Let's go blue. So we've got this pattern here that we just broke. And we've been breaking pattern after pattern after pattern on SM Energy. And we could pull back and back test or retest on this. I'm not afraid, guys. If we go back down a little bit, that's fine. And we may not go down, but we may do a little bit of a retest and then rocket higher. But right now, we've got this alignment. It looks incredibly similar to this pattern here, almost to the T. It's just a lot more volatile. And we could rocket higher at any point. Looking at Ethereum and Tetra Technologies, another energy service company that I've invested in. I invested in at this bottom at 50 cents right here. We've got an August 9th date that I pulled this. The star, the arrow, the arrow. Trust me, I stared at this stuff for many, many times here, guys. And I think we're still, you could say that maybe this is where it's at right here. You could maybe even say that we haven't gotten to that point yet, and that we're actually down below this line. Because if you look at where this arrow, this movement is, and it's all jumbled up, I think one could argue that the line should be up here. So I'll put that in there. If I really stare at this a little bit longer, that the line is actually here. And that right now, we've been scraping along this bottom in here, and we haven't quite gone up yet. So we might see a better buying opportunity, even than where it's at today, or right now is a great buying opportunity to take. Now, looking at what happened in the future, there's the line. I redrew it where I think it should be drawn. This is, oh, sorry, that's Tetra Technologies. Now, switching to UEX Corporation, August 9th again, looking at these patterns, we've got the star, the arrow, and then the accumulation phase, and then we're just breaking out to the upside on August 9th for UEX Corporation. Here is August 6th. As I was doing these, there's the down arrow is this guy here. We got the accumulation phase. We broke up to the upside here. We have been going sideways, and we're about to break to the upside at some point soon, hopefully. It's just delayed a little bit. Now here's Bannerman Energy. Again, August 9th. This was my old predictions. I'm just going over some old ones. And then I'm going to update Bannerman here. We've got a star in the arrow, and we got the sideways pattern. It's almost the identical pattern to Ethereum. I mean, look at this. Same move, same move. We came down. We got the accumulation phase and the arrow. I mean, it looks exactly the same as this. There's an updated picture of Bannerman. Here we are going up. We're moving on up, and we're probably right here. That's where we're at. And you can see that even the little move there. You can see that even the little move is exactly the same as we have it, and we could rocket higher at any point for Bannerman. And this is October 12th. So August 9th, that's what it looked like. August 12th, we've gone on up just like we thought. Here is Crew Energy. Crew Energy is another oil. It's an oil company, oil and natural gas company. We got the star, arrow, arrow. We got the accumulation phase. The accumulation phase is somewhere down here, and we're way below the accumulation phase. This thing could go rocketing higher. Here's an updated one. Now I put the accumulation phase here, but I don't know if that's necessarily right. I think we're probably even underneath this. I think we're down here. So the way that I would probably draw it if I were to do it again is I would draw it somewhere on the lines of probably like up here. Something like that. Right there. So this would be the same if I were to draw it right now as this guy. You came down, you came up. That the hump is this guy here. We came down like that. We came down and down and down and down. And I think this little clef is this guy here. That little guy is this guy here. We're coming on up, and we still have a ways to go on up for oil. This could go a lot higher for Crew Energy. Now we've got Wells Fargo Precious Metals. I'm kind of switching a couple of these things around. Star, arrow, and sometimes these arrows can go a little bit higher than the star. We came on down. We've got this pattern here. We came on down, we got the accumulation phase. We've got the little, this guy here is the clef here. We popped up above it, which is where the arrow is, this guy, and I think we are forming this little pattern here that goes sideways for a little bit on top of this pattern here, or a little bit lower. It comes right in through this area, this section in here. And then we're gonna launch. So we're right before a launch. How long will it take? It may take another couple of months or more. I think we're right there at the bottom, but this is gonna be a big launch, guys. That's Wells Fargo mutual fund. I'm just using a mutual fund for the heck of it. We've got some other stuff here. I used uranium, oil. We got these double humps in oil, and then we moved higher. The double humps here, we're moving on higher right before we were launching. And looking at Teuton Resources, Wheaton Precious Metals, EMX Royalty, these are the 1-2 humps, so to speak. It could be hump 1, hump 2, hump 1, hump 2. And if you look at the way that these humps look on oil here, it's the same hump type of movements to the T that number 2 has, where it comes up, creates this little cleft, comes down, comes back up, and we're right about at a launching point for Teuton Resources to move vastly higher. And we're on that point on every single one of these. And we could, I mean, remember, I don't know exactly where we're at in this little section here. I mean, it looks like we are very, very close to a launch at any point. And this was done in September 10th that I did these charts. Here's Encore Energy, and I did an updated one of this too. This is August 9th. There's your pattern that's the same. We came up, we broke out of it. See here, we could even draw this a little bit higher, which I would do. I would probably draw it right here, just by looking at and doing this. That's where I would draw it. This accumulation phase is this accumulation phase. It's downward a little bit. We broke to the upside, pulled back, we pull back, and then it's supposed to launch higher. There it is, launching higher. This thing is like a cheating guide. I'm like looking in the back of the math book, or we'll call this in the back of the chart book, where you get the answer before it even happens. And this thing's about to rocket higher, and that's exactly what we're seeing is about to rocket higher here. The money's coming. The flood of money into this sector is coming, and we can see it through herd mentality. It's coming right now. Here is Fission Uranium Corporation. I also did it there. I should have drawn it across there. Let's draw a little bit cleaner line because this is an ugly looking line. It should be something like that. So that's where it is. You can see that the patterns are exactly the same. And what is this? We're breaking to the upside on Fission on October 12th. This was August 9th below it. Here's October 12th breaking it. This is uncanny. How accurate this stuff is, guys. It's unbelievable when you can start to see that these patterns all align, and it's just herd mentality. And then you've got valuations and market conditions all in alignment. This is crazy. And that's all I have for this. Now, hopefully you guys are blown away by this. I was blown away when I started doing this analysis, and I'm an engineer. I love pattern recognition. I like puzzles. I like things like this, especially if you have rewards on the back end that can make you a lot of money. So I wanted to go over all this because I have a lot of new subscribers on the channel, and I wanted to refresh everyone that's on the channel. I wanted to make sure you guys know these patterns from the long-term perspective and where we are in those patterns. This gives me the ultra confidence to hold on to my shares of my companies, whether it be gold, silver, whether it be copper, whether it be uranium or oil and natural gas. It's coming, guys. And it's going to be bigger than anything that you have ever seen in your life. And the reason I say that, and I'm not trying to be profound here, is when you look at those charts in the beginning of this clip, where I did the commodity to stock ratio, it's never been this cheap. We are at historic lows. If you look at the interest rates, if those interest rates start to move, we are going to see a massive amount of money rotate. And I view this stuff from the big picture view that I just showed you guys. There's no way that I cannot not be in this. If that makes sense, I cannot not be in it. I have to be in it. And I am not trading in and out because the opportunity is so large to the upside that if I get caught out, I mean, literally just stick a knife in me and then cut the head off, because there's no reason to not be in it, in my opinion. What are some of the best plays in terms of leverage? I think uranium. And right now, uranium is probably one of the best values. It looks like it's ready to launch. And the multiples of the upside, if you were to do the calculations from previous bull markets, oil, natural gas, and uranium are the most leveraged in a commodity bull market. I also think, and I know you guys are downplaying this on the channel, I am still very heavily invested in precious metals, and I am heavily invested in royalty companies. I think by looking at the gold to monetary base ratio, and if interest rates are to go up, which I think they're going to happen, we are at a huge expansionary phase with a larger demographic, which means interest rates go up. It's done it every single time in history. If we get that, we're going to see the largest rotation of money into gold, and it's going to be something that we've never seen before. At least people that are alive. There might be some people that are alive that saw the 70s, but I'm talking about people of my age or anywhere around our age that are basically working today. Not many people have seen this that are still working. So they don't know necessarily what's coming. And the reason I know is because I dug into this stuff, and it's not about reading books. This is about me, myself, putting all these chart patterns together and creating this thesis for the channel by looking at chart pattern recognition, by doing all of these things. And I tried my best to piece this all together. And guys, this took me some time. It wasn't very easy. But if you guys like this content, if you want to follow our technical analysis that we do on a daily basis, subscribe to the channel. Give me a thumbs up for this content. Share it with everyone that you know, that you love and that you want to help grow their portfolio. I'm here to try to help you guys out. I feel almost that I have to. I don't know why. It's almost like a higher being is telling me that I have to do this. So for whatever reason that is, that's the reason. So hopefully this information helps you guys out in your investments. I can maybe do some other analysis like this on other charts like copper, tin, or whatever, but I don't know if they're nearly as leveraged as some of these ones that I just showed you. SM Energy is probably SM Energy, CDEV, NOG, CPE. Those are very highly leveraged companies to the move of oil. Those are the biggest ones that I could find, and I think I got pretty good entry points. So another one to look at, and it's very early, it's an exploration company, is RECAF. So hopefully you guys like this content. Hopefully it gets you a little bit, your grip a little bit tighter on the shares that you own. And hopefully it helps you kind of figure out where we are on the big picture view. If you guys like this content, again, give me the thumbs up, subscribe to the channel, and thank you for listening. This is Finding Value.